Hey, I'm your host, Mike Gelb, and this is the Consumer VC podcast where we discuss the intersection of venture capital and consumer innovation. If you're enjoying the show, also subscribe to my newsletter at theconsumervc.com, where you'll receive new episodes straight to your inbox and a weekly recap of all consumer deals that are happening. All content and episodes are for informational and entertainment purposes only and is not investment advice. Before we get into today's episode, I want to tell you about A-Venture, a new platform that's about to launch that's making venture capital available to the masses. It doesn't matter if you're accredited or non-accredited. A-Venture provides an opportunity to diversify your investment portfolio and invest in private funds. If you're a fund manager, the A-Venture app also provides everything you need in order to make startup investments, including extensive research materials, seamless transaction processes, and allocation measures so you can properly diversify your portfolio. Now, typically, venture capital and startup investments are liquid, which is a major pain point for industry. A-Venture is fixing this by offering periodic withdrawals for its investors. I and many others in this industry are so excited about this launch. They are preparing to list their first fund in the beginning of next year. So if you want to be the first to know, join their waitlist at aventure.vc. Our guest today is Anthony Zhang, founder of Vinovest. Vinovest allows you to invest in wine globally without leaving your home and without storing it yourself. He also previously founded EnjoyNow and Know Your VC. We discuss his introduction to entrepreneurship, what it was like coming back from a spinal injury, and guide EnjoyNow to a successful exit, why he started Vinovest, how people were investing in wine previously, and how he thinks about growth. Without further ado, here's Anthony. Anthony, thank you so much for joining me here today. How are you?
Mike, I'm doing well. Glad to be on here.
Thanks so much for taking the time. So, throughout your entire career, you've been an entrepreneur, you've founded 3 companies, and have had 2 exits, and now you're on Vinovest, which we'll obviously talk the majority of on the show about. But I wanted to ask, did you always think that you were going to be an entrepreneur, or maybe what was like their first inkling that entrepreneurship might be like the path for you?
Oh, that's a great question. I think just in high school, I had created my first, club. It wasn't even a company, but it was a club that we would work with the local Boys and Girls Club. And it was to provide study and test materials and textbooks to underserved peers and other students. So we would gather a lot of used SAT, ACT textbooks around the community. We would not only just donate them to the Boys and Girls Club, but a lot of us that were, sophomores, juniors, seniors who were already prepping or already had taken it, we would be peer tutors as well. That was just my first time creating something out of nothing. And it just felt really good, right? Just having the control to be able to chart the path that you want to see, create something that doesn't exist in the world. That was a really solid feeling. And that's what also helped me decide that I wanted to take a few entrepreneurship classes in college. And even before I enrolled in my first one, in my first semester, I ended up starting my first side hustle, which turned into EnvoyNow, which was my first food delivery business. So I think everything just kind of snowballed really quickly after that. Ended up getting funding, getting the opportunity to drop out of school with a Teal Fellowship, and really haven't looked back since.
That's awesome, and I appreciate you sharing that story about in high school about it was a means to kind of be creative, thinking a little outside the box, and then you just became fascinated, I guess, with just doing things yourself instead of I guess relying on other people, which is awesome. Wanted to talk a bit about EnvoyNow and the journey with that endeavor. I know it was a food delivery app focused, targeted towards the college market. And you were the CEO of EnvoyNow. You started it. You Mark Cuban came to town. You were able to raise $100K from him, and then from maybe other investors. You then suffer this incredible accident, unbelievable, where you get paralyzed from the neck down, and had to of course take a step back from the business for a few months, where you had to recover and go through that entire. And when you came back into the business, it was very different to how you left it. It seemed like it was in a pretty good spot when you left it, where what I've read is, your kind of co-founders wanted out. The business's future was it was very unclear, to say the least. What was that moment like when you are like, what was your thought process on returning to EnvoyNow? And why did you decide to come back? And did you and what was also like how you thought about yourself as a leader, having to lead people through these, through these times where you're in the position that you were, and kind of all of that. Like, what was kind of like your thought process during that period?
Yeah, so a lot to unpack there. I've been running the business for about maybe 2.5 years at that point. Things were going well. We were expanding to more and more markets around the nation, and I had my spinal cord injury accident then. That completely put me out of commission. I was relearning to do the most basic things in life, like even breathe without the help of a ventilator, right? And learning how to even hold a fork to feed myself, right? And that was what I was concerned with, was just whether I could even get through each day. And about 6 months after my injury, I was still, in intensive rehabilitation, inpatient at the hospital, and I got a call from a couple of my co-founders, and they're just like, "Hey, we want out, right? We don't think that we can run this. We think that we should just give the existing money back to our VCs, and we should just shut it down." And I think at that point, I was at a pretty low point in my life, and I didn't really have much else, right? My big part of my identity was on EnvoyNow, right? And um, for those of you who don't know what recovering like from a spinal cord injury is like, it's very, very slow. Neurological injuries, it's really not even guaranteed that you'll get better at all. And I think at that point, right, I was so focused on one aspect of my life that I needed balance too. And I wanted to be able to have something else to be able to occupy my time with, to think about, and that I loved, which was running my business. So something inside me was just like, all right, well, I'm not going to just have this thing fold over. It's so much promise. I love the people that I was working with, and I really believe that we could be able to get a better outcome than just, giving money back to investors and shutting down. So I took over as CEO. I remember this Zoom call with, at that point, there was like, we had 20 something managers, one for each of our markets, a couple other senior leaders in the company. I was like, "Hey, calling in from the rehab hospital, right? This is the first time they'd seen me in 6 months." And I was like, "All right, first of all, I'm all right. I'm breathing, I'm talking. I'm 100% there. I'm still Anthony, right? My brain is still there. And, I've got this bad news, right? My co-founders are leaving the company, but I want to come back as CEO. I think that we all, believe in this company, all joined for a reason. We can create a better outcome for this company, but we're going to need to dig deep, right?" We had a few acquisition talks, throughout the years that had all just turned down. But at the time in the market, there was a lot of consolidation in the food delivery app space. So I was like, all right, I think we can reach out, have potential buyers. And in the meantime, let's take the next 6 to 9 months to turn the business around so that we're more attractive as a target. So we gave ourselves a very firm timeline to get acquired. I told them like, "Hey, I'm still going to be in rehab, so I won't be able to be back at the office. I'll be there strategically and there to help with Zoom calls and things like that. But everyone's going to have to step it up, right? 120%, and let's see if we can turn the business around and get acquired." And that was kind of the mission, and that's what we, very thankfully were able to have a few successful, acquisition offers, and ended up choosing the one that was the best fit for us.
That's unbelievable. I mean, you're recovering from one of the worst, accidents, a person could have. And you then decide to regain, the reins of CEO, and don't want to, just have the company return your money to investors, and kind of have the company casually wind down, and actually orchestrate, a successful exit over the next 6 months, and obviously still grow the business. I mean, wow, that's just really, really incredible, Anthony.
Yeah, thank you. And it was definitely, I mean, in my mind, right, it was the only option. And I was like, all these people, like they left their previous jobs to join us, right? Like there's like livelihoods on the line, right? And I just firmly believe that like we all deserved just at least a shot at a better outcome rather than just going the default and rolling over and giving up.
Did you feel like you were under a lot more pressure as this, because as you know said before, you were running the company was kind of swimming along, humming along for 2 years. What was it like, and did you have to maybe change your leadership style at all, to what prior to the accident, and when the running and the company was humming along, versus when you went back into the company and things weren't in a ideal state?
I think I had to force myself to be able to delegate and empower others better, right? I physically couldn't do as much as I used to be able to do. And I just didn't also have the sort of context, right? I couldn't be going around to different markets, right? I was still doing 5 to 6 hours of physical therapy and occupational therapy a day. So I was just learning to let go a little bit more and trust others, right? And give them the space to be able to rise up, right, to the challenge.
Got it. Got it. No, that makes a ton of sense. So after you then had the successful the exit with Envoy Now, what then did you ponder or think about doing next? I know that led to Know Your VC, but like what was kind of your mindset?
Yeah, I think just first of all, just enjoying at least at first the transition, right, and learning what it's like to operate within a much larger company. That was a big experience for me. But I think I always knew that I wanted to move on to something else, right? Food delivery, being a college student, being a college aged founder, running a college food delivery business, that made sense to me, right? But I was getting older, and I didn't want to do college food delivery for the rest of my life, right? And I think at that time I'd started angel investing. It was around 2017, so it was around the time where in Silicon Valley there were a lot of really high profile VCs that were kind of getting outed in the news for some pretty terrible things that they'd done, right? Like racial discrimination, sexual harassment, like very similar to the stuff that was going on in Hollywood with the whole Me Too movement and Harvey Weinstein and stuff. So that kind of created the catalyst for the idea for Know Your VC, which was kind of like a Glassdoor or a Yelp for rating angel investors and venture capitalists. And I think just because of the social climate at the time, that site really blew up. We were getting hundreds of thousands of searches every single month on VCs, and not just founders rating VCs, but VCs rating other VCs, LPs looking at VCs profiles, and that was really not something that I expected to be my next thing to work on, but it was something that I was passionate about. Just felt there needed to be more transparency in the space, and a few buddies and I just kind of put together the project and launched it in the matter of I think like 2.5 weeks from the first time that we talked to each other.
Wow, it's just interesting how that was all you kind of were seeing and noticing what was happening across different verticals, different landscapes with the Me Too movement, and also and others, and you wanted to see how actually you can be of help or benefit when it came to the space that you knew quite well, which was the venture space. That's awesome. That's awesome.
Yeah, fundraising is never easy, right? And like as a guy, I didn't really experience any sort of harassment or discrimination or anything like that. And then, just talking with a few other friends that, were women or were from other minority backgrounds. Like it just felt wrong, right? Just not being able to do anything about it. So it's like, all right, this site needs to be out there, right? I don't care if we make zero money out of it. Like it just needs to be out there.
Were you able to get traction pretty quickly with Know Your VC?
Yeah, I think just because of the climate at the time, right? Like everyone was asking each other about their experiences with VCs, right? So this behavior was already happening, and people were still wary of disclosing information as well. So there were just a lot of chatter in a bunch of different places. So this was kind of just like the productized version of what was already going on. And I think that was a case in which like timing was everything. I think with a lot of companies, timing is everything, but we would not have been able to grow as quickly as we did if it weren't for just, the news cycle and the chatter that was already happening.
No, that makes sense. That makes sense. And so, what I guess you do well with Know Your VC. You're able to. I know it eventually gets acquired. What what led you then to wine? Were you always passionate about wine? Was that something that was always of interest to you?
Yeah, I'd always loved wine. As was growing up in Asia. So in Hong Kong and Beijing, when I was growing up, wine was a big part of the culture, especially wine from France, from Bordeaux, from Burgundy, and I just always thought it was a really cool thing to do. So after selling EnvoyNow, I started collecting wine, and it small hobby turned into a bigger hobby, and it quickly got out of hand, and I realized, all right, most people don't have the time or energy to do this properly, and it's not scalable unless you have a lot of resources. And that kind of got me to thinking, like, all right, maybe there's a better way to do this. How can we get more people into this market? How can we make wine collecting and investing more accessible? And that's kind of what led to some early conversations with my then coworker, now co-founder Brent, and we decided to launch Vinovest.
Were you collecting wine in order to turn a profit, which I know that that is, the genesis of Vinovest, or were you collecting wine because you obviously I know you love wine, but eventually to drink it at the right time?
It was a little bit of both. I'd be buying say 10 cases of the wine, sitting on them for a few years, and then maybe selling a few cases to cover my cost basis, so I could drink essentially like wine on the house. That was my initial sort of genesis. So a little bit of both, right? I wanted to drink this amazing wine, but also realized that it could be more valuable as it aged, as long as you age it properly and pick the right wine. So I think a combination of that passion portion and then also the profit driven portion as well.
So, what was the first when you got thinking about how you were collecting wine and, "Okay, can we make this more accessible and maybe turn it into, an alternative asset class, but kinda like more an actual product itself that you can actually, it can be really easy to invest in wine and maybe you don't have to worry about the storage as much, and and that sort of thing." What were kind of the first steps to founding Vinovest? Did you initially, I'd imagine you had to get the wine cellars and the vineyards on board?
Yep. So in the early days, right, it was just me and my co-founder really doing everything, right? We had found the right relationships with the storage facilities, we'd found the right access with the suppliers, and the right insurance as well to be able to manage this ourselves. But none of it was really tech driven, right? It was just a bunch of different contacts on a bunch of different spreadsheets and emails and websites. So Vinovest was really the way to just abstract all that into the background and productize what we were already doing. So when we launched, it was really just a wait list. Right? He designed something on Unbounce. We put it out. We spent about $300 in Facebook ads and collected a bunch of leads. And we talked to each one of those leads. We're like, hey, like, what do you want out of this service, right? Have you invested in wine before? How much would you want to put in? What are the things that you would need taken care of to warrant paying for a service like this? And just did a lot of user interviews. And I think at that point we had nearly $500,000 in demand. So we're like, all right, well, this works. We have $500 in Facebook ads turned into $500,000 in demand. And we're like, all right, let's build this, right? And that was kind of the proof points that we needed to be able to launch, because we've been talking to friends about investing in wine, and even people who I know don't even drink wine were interested, right? And that's what kind of lit lit the fire under, kind of under our asses, was like, hey, this could be much bigger than just for people who like wine. And of course, there's hundreds of millions of people who like wine, but if people can see it in as a collectible item, as an asset, irregardless of their taste preferences, right? That's what really opens it up to be a much larger and more exciting opportunity.
And when in terms of what you were doing on the ops side and how the operations work, are you going to vineyards, I guess, purchasing the wine and then putting it into your finding your own storage facilities and then putting that wine into storage facilities and then putting a price on the wine up on Vinovest, or like what's kind of the structure in terms of how it actually works overall from an operations standpoint?
Yeah. So, an investor will come to us and say like, hey, I want to invest $10,000, right? Here are some of my preferences around how long I'm expecting to hold this wine for. And based on that, we have an algorithm that creates a strategy on how we want to allocate that person's portfolio, right? And then we'll go out to our winery supply partners, right? Get the right wines that fit that person's portfolio and then store them. So oftentimes we share storage facilities or have the same storage network as our winery partners, so the wine never needs to move. So French wine is in France, right? American wine over here, with all the major wine growing regions, and then we'll inspect the wine, insure it, and custody it for the customer, and then they can see on their dashboard, just like any other asset, price fluctuations as the portfolio grows, information, research, analysis about what they own, why this wine is doing what it is, and really be able to be engaged along this journey as well.
I'd love to like break down in terms of like the life cycle of a fine wine and what fluctuates it either going up or even maybe going down. Like is it always going to be is it always usually going to land at the same price, or what that end price is going to be, or how do you think about that and also display that to your to people that are participating on Vinovest?
Yeah, great question. So with wine appreciation, there's a few key factors. Number one is the ageability of the wine, right? Most wine produced in the world, it's meant to be consumed within a few years. But really that top sort of like 5%, 10% of all wine produced, that's what we're looking at. That, all right, it can age 10, 20, 30 years. So it's a long lifeline. And every single year when it's out there, people are drinking it, right? So there's less and less supply as time goes on. And so not only does that wine become more scarce, it also appreciates in value because the taste profile changes to be more desirable. So those two factors help to create demand and increased pricing pressure that leads to pretty steady increases for wine as it ages. Um, Very, very different depending on the vintage of the wine, depending on where the wine's from, what type of wine it is. So what we do is we look at historical vintages, right? So say if you're buying a new wine from the year 2021, you can look at the same winery and look at what the 2011 did, right? Now that that thing is 10 years out in the market, you can kind of see what the pricing patterns will look like at year one, at year five, at year 10, and even beyond. So those are kind of the comps that we can show when we're making these pricing decisions, when we're helping to educate the client to show them what they can reasonably look at. Obviously, they're not the exact vintage, right? There's different weather conditions, supply conditions, and taste profiles that make each year so unique. But it is a really good proxy, especially with wineries that have been producing wines consistently for 50, 100 years.
Well, in terms of making, a particular vintage, unique, um, is that something I'd imagine that's based off of maybe weather patterns or just what have you that specific year? Is that something that you can figure out pretty quickly? If this particular vintage is going to be great, or is that something that might take years to really distinguish or understand if that particular vintage will be one that does really well, and just how do you think about from it from that perspective?
Yeah, usually you can tell pretty early that this is going to be great or okay, right? It all starts in the vineyards in the harvest. So, with our relationship managers, they're talking to the winemakers regularly to kind of see, all right, how's this harvest looking up? What are the yields looking like? And what can we kind of reasonably expect? And even before that wine is bottled and sold to the public, critics and industry insiders get the opportunity to taste the wine, right? Then they can kind of start to form some initial opinions on what that's going to be like. Um, I'd say there are cases in which things may have been so or not so great in the beginning, and the wine actually got a lot better than people expected when they retasted it. Usually they retaste every 5 to 10 years. And usually when it comes out really, really highly rated, it's going to continue to be good, right? The the wine doesn't really get worse with age. So those are kind of some of the signals that we see in the market, and really it's up to the consumer taste and preference as well, right? If there certainly just is a ton of high demand for a certain region, people don't really care if it's rated a 95 versus a 96, right? They're just going to take all of it. So the big factor, the big X factor, is the consumption market.
So the consumption market is what then is the actual risk factor per se in terms of what the price is based off of. Is that roughly right?
Yeah, I would say so, right? Because that's the eventual consumer, right? That's who we will sell to, is someone who's planning on drinking that wine, or maybe they want to age that wine for a few more years longer before drinking it. But right, all wine is going to be consumed by someone at some point, someday, and it's just kind of a determinant of the price, right? If people prefer the taste of wine that's 10 years old, right, would they rather pay $100 and wait 10 years, or would they rather pay $300 and have it now, right? And that's kind of the choice that people are making every day on a consumption basis.
So in terms of the actual risk that since you find out pretty early when it comes to if that vintage is going to, take off and it's going to be a great wine, or, just so, I'd imagine then when someone's on, the Vinovest site and thinking about, purchasing wine, then you're going to become a lot more accurate in terms of what the price is going to be in the future, right? Since that's already in some ways taken care of, or I guess priced in that risk. Is that roughly right?
Yeah, exactly.
How profitable is wine as an investment?
So historically, when we look at wine returns, we look to the LiveX 1000, which is kind of our benchmark in the market when we're talking about wine returns. And when people say, oh, like wine returned 10% last year, right? That's the index that they refer to. Historically, that has been around 10% a year. So pretty steady annual returns. And it's something that we at Vinovest, we look at that benchmark and we try to beat it every year.
Cool. Oh, that's great. Um, do you also? I understand that you've built a market where people can invest in wine, and that's great. Obviously, the wine's going to be at a peak at some point in time, whether it's 10 years, 20 years, 30 years, 40 years, and obviously that's part of the beauty, depending on what the investor outlook or timeline wants to be. Then they can kind of make a match make with those wines, but how does that transaction take place when it comes to actually selling the wines when they're at their peak, or when it actually makes sense? Is that something that there's already kind of a market for, or is that a market that you've already built?
Yeah, so both. There are existing markets for selling wine, and there's also one that we at Vinovest have ourselves as well. So our marketplace, we process millions of dollars worth of wines of transactions every year, and we also connect with external parties as well, right? The world of wine is very fragmented. There's no sort of New York Stock Exchange equivalent where everyone trades on the same market. There's many small regional markets that we work with externally, and we also have our own. So for us, we just want the best price discovery opportunities, right? Whether it's from a European market or an Asian market or a North American market, we want to see all the data points to be able to make the best decisions and give our clients the most data to be able to make those informed decisions as well on when they want to sell.
And when they do want to sell, is it the type of thing where Vinovest is saying, okay, this is a great price to sell at. This is what you should sell at, or um, does the I'd imagine, since you've actually invested in wine, then you have full choice in terms of what the actual price point you can sell the wine for. But how do you think about suggestion when it comes to when it and kind of and relaying that to the wine owner when it comes to price?
So we do give guidance on selling windows because, to your point, right, the wine will peak in flavor at some point, but it's not like milk in which, like, if you miss a day, it's completely bad, right? It's a very gradual curve over the course of years as it matures. So there's a pretty wide window of guidance that we give folks, like, hey, anytime between 2027 and 2031, for example, right? And within that, that's kind of like the range in which you should probably look to sell. Um, After the range, it doesn't mean the wine is bad, right? It just is probably very, very mature. There's less and less people who like that more mature taste of wine. So your demand, right, or your potential market of buyers decreases over time. Um, and that's kind of the general guidance that we give folks, right? We know it's up to them. They can set their own price. They can choose where and when to sell it or to hold on to it or drink it if they wanted to. But we're here to give you the information on when, say, like others may generally look to sell it.
Got it. And in terms of the price, that is the actual owners of the wine. They're the ones that actually set the price in terms of what they want, or does Vinovest?
So they can set the price, right? Like they can, say if they see, all right, this wine was traded at $100 a bottle last week, they probably want to set it at 100, right? Or maybe if they don't plan on selling it for a while, they just want to put up a limit order. They're like, hey, I'm gonna put it at 150, right? If it ever hits there, I'm ready to sell it, right? And that may not hit for a while, but they can still post that out there to know that's selling demand that somebody has at that price. So it's pretty much just like any market in which that price discovery is really up to the individual, and they can choose to sell it as quickly or as slowly as they want.
How do you think about, because it seems like you're trying to attract um, different, I guess, profiles of people to Vinovest. You obviously have the vineyards and the wine producers that produce the wine. You have the investors or people that actually purchase the wine that want to that you think of this as an alternative asset, and then you also have these kind of third I guess profile of people that are actually the people that you hope the investors actually sell to actually consume the wine itself. How do you think overall about building, I guess, relationships, because it's kind of like three-sided per se. How do you think about building like relationships in all three of these kind of categories?
Yeah, it's absolutely an ecosystem, right? Because all of these parties and counterparties need to be able to interact and be able to interact with each other for this whole thing to work, right? There's the initial producer, there's, to your point, the buyer, and there can be many buyers and sellers, right, along the lifeline of wine, and then the eventual drinker, right? And sometimes the buyer is the drinker, right? Or sometimes maybe the producer can be the drinker. So not only are there multiple counterparties, but there's also multiple roles that the same counterparty could play. And for us, we want to make it as open and transparent as accessible as possible, because anyone could be that collector or investor or buyer, right? And that's kind of what we see as our role, is being able to provide the right access and the right data and transparency for this market to just work by itself, because people have been doing this for hundreds, if not thousands of years, right? Wine is nothing new. The way it's produced and consumed and enjoyed is pretty much the same as they've done, for hundreds of years, and it's also been used as currency and as a store of value for hundreds of years. So what we're doing is just modernizing the existing behavior and being able to get a lot more people in.
What's been, I would say, the hardest part to build or to attract attention to? Is it getting the vineyards on board? Is it getting people that actually want to invest in wine, or maybe convince them that wine is a great asset to invest in? Or is it the people that eventually will be buying the wine in peak, which of course you need a very robust, I'd imagine, people that will be buying the wine, because or else the people that actually have invested in the wine won't be able to actually exit on their opportunity.
Yeah, I think all are very important, right? They're all parts of the ecosystem that can't really survive without the other, right? If you can't buy the right supply, then that means that you're not able to attract the clients, right? They're like, oh, you aren't able to get the right wines. But also, if you can't get the right supply, that means that the wines eventually, when they're sold, they're not as desirable, right? Or there's not enough. So to me, like, it all starts with the supply. If you have quality assets that are then stored properly, right, and that they are managed correctly, there's always going to be a market for it, right? Because we're not looking at, there's really, it's really difficult to have like a up and comer that no one knows about in wine because of the cycles, right? Like every vineyard can only produce one harvest a year, and it takes many years to decide even if that wine is good. So it's just a very, very forward-looking and long-term industry in which we know what the stars of the next 5, 6 years are going to be today because of that long feedback cycle.
How do you also think about partnering? Because there's also a lot of kind of wine startups where you they might use, they rent or use grapes from a vineyard, and they might not have their own vineyard per se. And there's a lot of wineries or wine brands that do that. How What's your kind of vetting process when it comes to, I guess, new brands, and if they make sense to actually be on your platform?
So we typically don't work with new brands because of kind of what I mentioned, because it just takes so long to even know what's the price of the wine in 20 years, right? So if you're not 20 years old as a winery, it's very difficult to know. We do make some exceptions, right? If it's a very established winery that is opening up a new sort of label or product or project, right? You're able to kind of by proxy get to know what the winery is all about, or maybe it's a really, really talented winemaker that left to go start his or her own thing, right? Or at a new winery, right? Then that immediately gives this existing winery a boost in its profile. So those are things that we'd look at. But typically we stick with things that are proven, times that are, kind of proven through time and the market has shown us as well.
So why did you also, I know you recently or fairly recently started Whiskey Vest as well, with creating whiskey into an asset class. What was that like, and how did that kind of come to fruition?
So for the whiskey product, it's something that we've been getting asked since pretty much since day one, right? Wine and whiskey and other spirits, they just go very well together, right? If you're into wine, you're probably into whiskey or vice versa. Some people might not be into wine, but really into whiskey. So we launched this wait list about a year ago, and that wait list has really ballooned. It's gone to over 15,000 people at this point. So we've been able to let in, a few hundred people over the past few months, but it's something that the demand is there in the market. Similar to wine, it's very difficult to be able to acquire really high-end quality whiskey. It ages as well, right? An 18-year-old Scotch is going to cost more than the 12-year-old Scotch from the same brand, just because it takes more time, right? And because of evaporation, there's just less of it, and very similar supply and demand dynamics as that whiskey cask ages and becomes more mature. And because we found a lot of parallels, and our technology and the team's expertise also lends very well into this vertical, it's something that we're really excited to be able to launch fully out of pilot mode later this year. But it's really been a long time coming, and I think we've been kind of forced to do this because of the market demand.
That's great. That's great. What are there other verticals within alcohol that you're also thinking about, that could be on their horizon, that are interesting to you?
I think anything that can age. So, other spirits like tequila or rum, maybe someday. Um, I think those markets are still underdeveloped, not really investment worthy today, or not big enough of a market, but that could change, right? I think bourbon, especially in the past 5, 10 years, has shown us a huge sort of resurgence in popularity, and that's kind of led the way, at least for the American whiskey market. Same with Japanese whiskey, right? So who knows what the sort of next bourbon could be.
Have you also found that, given like the macroeconomic climate and all that's happening in the world, that people are more open to investing in alternative assets like wine? Like, I know that you compare yourselves, for example, like the S&P 500 and what have you.
Yeah, I think especially because there are less resilient options in the world, people are more open to exploring. You've got a ton of folks who maybe signed up a year ago, even haven't become a customer. They're coming back now. They're like, all right, maybe investing in wine isn't so crazy, right? Or maybe I've learned a little bit more about the market, and this seems like something I can maybe park a little bit of money in now, given that stocks and crypto and everything else has gone to shit. So I think also it's like the comparative value of it, right? When the S&P was giving everyone 20% a year returns, 10% doesn't look that good, right? But now that it's continued to give you 10% plus returns, and it's going to ride out a lot of the volatility that we've seen. People are like, all right, I can take that 10% all day now, right? Especially if it's not going to drop 80% like a lot of tech stocks have, and give people, you know, that sort of peace of mind in terms of knowing that, hey, this is something that is a real product. It has real utility. People drink it, and the dynamics of why the price goes up and down are pretty simple to understand as well.
I totally get that. Do you also feel like when there's been a recession or a down market, and that then when it comes to, if you actually are a holder and maybe your wine is in, during the peak period, does that then have a effect when it comes to actual the price that you can sell your wine for? Since I presume that there might be people that are a bit tightening up their finances, maybe don't really want to spend as much. Like what are I guess like the risk factors when you actually sell that maybe you should be paying attention to? Like does like a down market affect, your ability to sell, and should you wait until, there's more of like it's a better macro environment, or does that not matter as much, if you found?
I think it certainly matters. Recessions are going to affect everything. And I think the number one thing that we talk to clients is aligning their sort of time horizon expectations, right? This is not the stock market. It's not crypto, right? It's not short term at all, right? What factors into wine prices is just the aging, and no one can slow down or speed that up. So if you're looking to buy a case of wine and sell it in a year or two, this is not the asset for you. This is a 5 year hold, really at the minimum, because that's how long it takes for the wine to appreciate in a different enough way for people to be able to want to pay a higher price for it. So that's really the main education, right? It's like real estate, right? It's like gold. You don't want to buy a house and then, you know, live in it and then sell it after 6 or 9 months. So for us, aligning those expectations is really important, which is, I think, also why it has been really resilient against recessions, right? Recessions maximum are like 2, 3 years. So if you have a 5 year, 10 year horizon, what happens in the next year or two doesn't really matter, right? You know you're going to sell it in the next 10 years. And by the time 10 years are up, it's going to be a much, much different macro picture.
Yeah, I mean, it seems like because that kind of peak window is, as you say, it's not milk. It's not like a day. It's actually over, 3 to 5 years horizon, let's say. That then if there is like a recession, for example, or something, then you can actually then see it through and still maybe be in your peak period to sell. If prices have gone down for wine during a recession, just thinking, because there might not just be as much demand for it. So that's no, that's really interesting. Um, what is what's one book that's inspired you personally, and one book that's inspired you professionally?
Ooh, that's a great one. I'll go with the one that I just read. This is called Six Types of Working Genius. Um, Short read. I really loved it. It's basically just talking about like people's core competencies, what really gives them energy and joy in their daily lives, and also what are the things that really suck the energy out of them. Right? They've identified into six types. Usually, people are really good at two. They really, really despise the other two, and the other two are in the middle. And after reading it, it was initially a business book, but after reading it, I was talking to my wife. I'm like, what do you think your two like core working geniuses are, right? And how can that actually help our family when we're making decisions, right? Or just doing things that we need to do. So personally, that actually was a really, really cool book to read and realize like, oh, maybe I shouldn't be doing as much of this because my wife actually enjoys it more. And maybe she shouldn't be doing much of that because not only does she not like it, it's something that I actually like more. So it really helped, I think, our balance. And also, in business, right, in our leadership team and in our company, right, you want to align your employees to do things that give them the most energy and that can align to them having the highest impact in your business. So that to me was kind of a double whammy. Was able to help out on both. And then another one that I'm reading is called, I think, 15 Commitments of Conscious Leadership. So that also is one of these like hybrid, help you in your personal life, help you in your business life type of books, where it just talks about the ways and situations in which you're able to encounter different forms of leadership, and how how living, they have this concept called like living above the line and below the line, but like how living above the line and practicing these sort of principles and commitments can help some of the best leaders be able to lead their organizations through tough times. And we've certainly all had tough times over the last 12 months, and probably the next 24 months and beyond.
No, for sure. I don't think we've had any other guests mention these two books. So really excited to add it to our book list. And this is great. Very, very original, Anthony. Very original. That's awesome. My final question to you is, what's one piece of advice that you had for founders?
I think right now is just figure out ways to stay alive, right? The funding environment is tough, right? And multiples are down. Everyone in the venture market is hurting, and they're all realigning their expectations. So I think a lot of times, success is about survival, right? It's just about being the last person standing. So if you haven't already made the right measures to ensure your startup's profitability or viability for the next 2 or 3 years, like these are things that are more important than anything, right? Live to fight another day, set yourself up for the long term. Don't expect to raise unless you're absolutely crushing it. And even then, you'll be surprised with how tough the market is, and just survive, right? I think we've had this huge boom and bust in the last 2 years that was certainly unsustainable, but just with how quickly the valuations have risen, they're coming down just as fast, right? I think it's a huge adjustment for a lot of founders' business models and operating expenses and capital expenses to be able to align their expectations to the new market.
That's a great point. That's a great point, and that's a excellent piece of advice when it comes to this mind. Just kind of stay alive. Think about, obviously, focus on cash flow, focus um, on burn, and as well as this is a really tough funding environment too. So just focus on staying alive. Anthony, thank you so much for your time. Really, really appreciate it.
Mike, likewise. Thank you for the thoughtful questions. I really appreciate it.
And there you have it. It was terrific chatting with Anthony. I highly recommend following him on Twitter at Anthony_J_Zhang. If you're enjoying this podcast, also subscribe to the newsletter at theconsumervc.com.